right now. There are 3 ordinary sentences that seniors say to their own bank every single day, and any one of them can get an account frozen within hours, not because you did anything wrong, not because of fraud on your end, but because banks are legally required to react a certain way the moment they hear certain words, and nobody at the branch is going to warn you in advance which words those are. I'm going to walk you through exactly what those 3 things are, why they trigger a freeze, and what to say instead so your money stays exactly where it belongs, in your account, and in your control. This matters more after 65 because banks now flag senior accounts differently than they flag anyone else's. There are federal and state rules specifically built to protect older account holders, and while the intention is good, the execution means an innocent sentence can lock you out of your own money for days or even weeks while they investigate. Thing number 1, never say you're withdrawing a large amount to give it to someone you haven't personally met. This sounds oddly specific, but it's the single biggest trigger in the entire banking system for seniors right now. If you walk up to a teller and withdraw several $1,000s, and when they ask what it's for, you mention a relationship you started online, a caller who told you there's a problem with your Social Security, a grandchild who called asking for emergency bail money, or an investment opportunity someone reached out to you about, the teller isn't just processing your withdrawal anymore. Under the financial protection laws that exist in most states now, that comment legally obligates them to pause the transaction and file an internal report. Your money doesn't move. Sometimes, the entire account gets a temporary hold while the bank's fraud team reviews it, and that review can take anywhere from 24 hours to 2 full weeks, depending on the bank. Here's what almost nobody explains. This rule exists because scams targeting seniors cost older Americans billions of dollars every year, and banks got tired of watching it happen without being able to stop it, so they built in a legal right to pause suspicious transactions. The problem is, the trigger is broad. It doesn't have to be a scam. It just has to sound like one to the person behind the counter. What to do instead if the withdrawal really is legitimate, like a gift to a family member you've known your whole life? Say that plainly and specifically. Name the relationship. This is for my son, for his mortgage down payment. Vague answers, or any mention of someone you only know from a phone call or the internet, is what flips the switch. Thing number 2, never tell the bank you're keeping cash withdrawals under $10,000 on purpose. That's one catches people completely off guard because it sounds like the responsible thing to say. Maybe you've heard that withdrawals over $10,000 get reported to the government, so you think you're being smart by staying under that number and mentioning it to the teller so they know you're aware of the rule. That single sentence telling them you're intentionally staying under the reporting threshold is called structuring, and it is one of the most serious red flags in all of banking. It doesn't matter that your money is completely legitimate. The moment a bank employee hears that you're deliberately avoiding a reporting requirement, federal law requires them to file a suspicious activity report, and in some cases freeze the account while that report is reviewed. This isn't a gray area. It's one of the most automatic triggers that exists in the entire banking system. The irony is brutal. The reporting rule itself was never a problem for you in the first place. Banks report withdrawals over $10,000 as a routine matter, and it has zero effect on you personally. It's not a tax, it's not a flag on you, it's just paperwork between the bank and the Treasury. But the moment you mention trying to stay under it, you've turned an invisible known issue into an active investigation. What to do instead? If you're withdrawing your own money, take out what you actually need, whatever that number is. Never explain your withdrawal amount by referencing the $10,000 rule at all. Silence on that specific topic is what keeps things simple. Thing number 3, never mention that you're the only one who knows your account password or PIN, and that no one else in your family has access. This might be the most surprising one on the list because it sounds like good security advice, and in almost every other context it is. But when you say this to a bank representative, especially after 65, it does something you don't expect. It gets flagged internally as an isolation risk. Banks are trained now to watch for signs that an older customer might be financially isolated, meaning no one else can see their accounts. No one would notice if money started disappearing, and no one could step in if something happened to that person suddenly. Saying it out loud, even casually, even as a joke about being fiercely independent, can trigger a note on your file that leads to extra scrutiny on future transactions, holds on larger transfers, or the bank reaching out to ask uncomfortable questions before releasing your own money to you. The deeper problem this reveals is a real one. If you are the only person with access to your accounts, and something happens to you, a stroke, a hospitalization, a memory issue, your family can be locked out of paying your bills, accessing your funds, or even knowing what accounts exist, for weeks, while they go through courts to get legal authority. Banks have started treating nobody else has access as a red flag precisely because it so often turns into an emergency. What to do instead? This is the one thing on this list that isn't just about what you say, it's about what you do beforehand. Set up a documented power of attorney with someone you trust, and make sure the bank has it on file before you ever need it. That's not the same as adding someone to your account. It doesn't give them access to spend your money today. It simply means that if something happens, they can step in immediately, legally, without a court fight, and without your account getting frozen while everyone figures out what to do. Here's what ties all three of these together. None of them are about doing anything wrong. All three are about banks reacting to specific words with specific legal obligations. Obligations that exist because of real scams and real emergencies that happen to real seniors every single day. The system isn't your enemy here, but it doesn't explain itself either. Nobody hands you a list before you walk into a branch and says, "Here are the exact phrases that will get your account frozen for 2 weeks. So here's what I want you to take from this. Before your next visit to the bank, remember these 3 things. If you're withdrawing money for someone, name exactly who they are and how you know them. Never mention the $10,000 reporting threshold, even to sound responsible. And make sure someone you trust has documented access to step in if you ever can't manage things yourself. If you know someone over 65, who handles their banking completely on their own, a parent, an aunt, a neighbor who still drives herself to the branch every week, send them this. One of these 3 things has probably come out of their mouth without them ever knowing what it could trigger. A 2-minute video today could save them 2 weeks of a frozen account tomorrow.